This video will demonstrate how to enter bills in QuickBooks. When we go to QuickBooks, if we go to the supplier section and click on Enter Bills, we will be brought into a new window. We can describe the window as being split in two, the top half and the bottom half. The top half is where you put in the key information from the source document, and the bottom half is where you post it to an account in the chart of accounts within QuickBooks. Let's demonstrate this by using the first example in the practical exercise, which is the first bill or purchase invoice that we have to enter into QuickBooks. So the practical exercise, we're now going to enter purchase invoices and enter credit notes. Let's have a look at the first invoice. The first invoice is from Easy Peasy Computers, and we are buying on the 19th of January a computer and printer. We're being charged VAT, and the total amount of the invoice, our source document, is 303,750. Let's have a look at how we would have entered that in our purchases daybook in the manual system. Again, from the source document, looking at, we would have put in the date. We would then enter the information of who the supplier is. We would put in the reference number of the source document, and then we would write in the total amount. If we look at how this is done in QuickBooks, again, the top half is where we're going to write in the name of the supplier. As this is typed in, when you're finished typing it in, if you click on the Tab key, it will come up with a message saying that Easy Peasy is not found in the supplier list. You have two options. You can Quick Add, which will automatically enter it onto the supplier list, or you can set it up by putting in the details of name and address and so on. For this instance, we will just put in Quick Add, and if you want at a later stage, you can go back to the supplier section and complete the relevant data, but for this case it is not required. Click on Quick Add. Now the date of the document, the reference number, and the total amount of the source document, 303,750. Again, ignoring terms and bill due dates and memo areas, that is the top half of QuickBooks entered. Back to the manual daybook. Same information, we're telling the daybook what the source information is. Now we have to analyze this information into the analysis columns on the daybook. The first thing we're going to put in, of course, is the VAT. Then we need to create an account or analysis column, which is an expense category as appropriate. And again, looking at this invoice, we can see that it is for a computer. A computer is not treated as just a general expense, but in fact it is a fixed asset. So again, we'll have a separate account called computer equipment, and this is where we will write in the net amount after VAT, 2510. So as we recall from the daybook, we've created analysis columns, we've told the daybook where we want these analyzed to, and the aggregate of these two will total the 303,750. Let's bring this into QuickBooks. So as we move our cursor, we go to the analysis section at the bottom half of QuickBooks. Again, the account that we're looking for, it may be there, we may have to add it as we go on, but let's just click on a drop-down list. We've already agreed it is not an expense, so we move up or down as may be appropriate. And at the top we start off with balance sheet items, and we can see we have an account called computer equipment. When we select that, click on Tab, it brings you into the VAT account. Again, remember, similar to the daybook, we now need to appropriate a VAT code. If we can't see it clearly there is an option to go to the bottom right of this box that's just appeared, and then left click your cursor and drag, and it'll bring out all the information. In this case, we can see the VAT rates now, and this is an item that is not for resale. We click on that. As we do that, the VAT element has been separated, and the 251033 remains as the amount that has been analysed in the computer equipment account in the chart of accounts, and the VAT has been shown as 52717. Again, if there was a default it was rounded up or down, you can just highlight it and change the VAT amount as appropriate. Again, let's just one more time go back to the daybook. This is how it's done in the manual daybook. You first of all put in the source information, and then you analyze the amounts as appropriate. In QuickBooks, we did the exact same. We put in the source information in the top half, and then we analyzed it in the chart of accounts in QuickBooks with the relevant VAT, and this has been analyzed in the bottom half. When this has been done, we record this by clicking Save and Close to exit the Enter Bill window, or Save and New, which will save the information, and leave the window open to enter a new window. Again, because this is more than 90 days in the past, we'll accept that, say yes. The next item on the Enter Bills is Electricity Supply Board. Again, when we were entering our opening balances, we already have this, so just keep an eye out for the accounts, and you can see that it autofills to that. Just once it's highlighted, click on Tab. The date, 15th of the 1st, 11. The reference number, 1234, and the amount due is 560.00. That is the source document entered in the top half of QuickBooks. If we were doing that on a daybook, again it's the amount, 1234, and 560.00. Now let's analyze it in the daybook. We can see that VAT is 6660. We now need to set up a new account or analysis column called maybe Light and Heat, and put in the relevant amount, net of VAT, 493. So again, our experience tells us that we have analysed it, and we've put in the source information as well. In QuickBooks, we now need to move our cursor until it gets to the account column in the bottom half of the open window. Again, now we know it's an expense and not an asset, and we need to scroll down to see is electricity or an account that may be appropriate to allocate or analyze on this, and I can see here we've got gas and electric. If you wanted to set up a new account, by all means that is possible, and you can do that. Click on gas and electric, click on Tab. Now we need to know what the VAT rate is, and because this is open now we know that electricity is a non-resale reduced rate at 13.5. Click on that, and again it will automatically change the VAT and the net amount. Now I can see here that it is appropriating the net amount at 493.39. I need to change that to agree with what's on the source document. In this case it's 493.40. And now I need to go back here on the VAT and change that to 6660, so that the 6660 plus the 493.40 agrees with a total amount of 560. Save and close. Click on yes. That is how we will enter the purchase invoices into QuickBooks. Back into QuickBooks. If the bill or the document is a credit note, you will click on the credit item just here and just enter the information, source information from the source document, and then allocate it to its respective account in the chart of accounts, and that will enter the details for a credit note. And that is how we will enter bills or credit notes in QuickBooks.